Hi, this is Nick. Welcome to ISG, where we talk all things real estate in the Czech Republic. Today, we're going to look at borrowing against an existing property. There are quite a few interesting deals out there. So if you're already a homeowner, you may be looking at trying to borrow against your existing property to get a nice deal. Although interest rates are high, rents are also increasing, so your return on investment is getting better and actually maybe doesn't look so bad in the grand scheme of things. Also, with the current economic situation, you may be more interested in keeping cash in your pocket in case of major issues, so borrowing might make sense for you. So how does it work? The basic theory is that you would give a property as collateral, the one that you already own, in order to secure another property without putting any money in at all. So the bank would lend you against the property that you're buying and the property you currently own. So there are two variations here. In the first variation, you own the property outright. So that means that you can borrow against your existing property with any bank you like, theoretically up to 80-90% of the property's value. And you can also borrow against the property that you're going to buy. So it's very easy to do this with any bank, and as long as you can afford the repayments for the total loan. In the second situation, you have a property that you own, but you also have a mortgage on it. So here you'll only be able to work with your existing bank. So whoever it is going to be the only option for you for securing a second loan. Also, you can only borrow against the property up to a certain amount. So that's normally, again, going to be around 80-90%. 80% would, of course, give you a better interest rate, and is probably the best thing for this kind of investment technique. So let's say you have a property worth 5 million crowns and you have a mortgage of 2 million crowns. In total, you can borrow 80% of the 5 million, so 4 million crowns, which means that you can borrow another 2 million crowns from the bank on this property. So, for example, if you're going to buy another property that was worth 5 million, you would borrow 4 million against that property, meaning you need 1 million crowns to put in, and you could borrow this against your existing property, as long as you can afford the mortgage payment. So overall here, you end up borrowing 100% of the value of the new property, and you have to put no money down at all in cash, maybe just some small fees here and there. And this could also be something you could do with some kind of renovation project as well. Of course, for this to work well in terms of an investment product, you have to have a really good income from that new property in order to pay quite large interest payments every month. But there definitely are things out there that can make that work. This is the end of the first part. I look forward to seeing you for part 2. Take care.